thank you for watching my videos. So far, we've learned that there are three ways of analyzing the market: technical analysis, fundamental analysis, and sentiment analysis. We've also learned that technical analysis involves using tools provided on our trading platforms as well as mathematical formulas to analyze the market. We also learned that fundamental analysis involves paying attention to news events and reports from governments and central banks in order to facilitate us in making our strategies. And sentiment analysis is based on how people feel about the market. Now, unfortunately, in the Forex market, we don't have the ability to measure sentiment analysis as well as stockbrokers, because in the stock market, they can measure volume, but in the Forex market, we can't. So, in this video, we're going to learn how we can get accurate sentiment analysis from the same source that stockbrokers get. Okay, so here's what we need to know about market sentiment. Again, it just refers to how people feel about the market, and what we're doing is we're taking the personal views and opinions of those that are involved, such as individual traders like you and me, banks, corporations, governments, anyone involved in the Forex market. And we need to be able to measure how they feel and their views about the economy right now, the markets right now, and the direction that the economies are heading in the future. That's also important in determining which investment is the right one. Okay, so let's talk about developing an approach based on sentiment. Now, again, the only disadvantage that the Forex market has in comparison with the stock market is all of our trades are done over the counter. We don't have a centralized location. We don't have a headquarters. So again, it's very difficult to measure how much of a currency is traded. So let's use the information that stockbrokers get in order to determine sentiment analysis. So here we go. Now, let's talk about the Commitment of Traders Report, otherwise known as the COT. Now, in the United States, we have an organization called CFTC, which stands for Commodity Futures Trading Commission. Now, every Friday they publish a report which gives us an idea as to what was traded and the activity. So many stockbrokers, they rely on this because this gives us information about hedgers, large speculators, and retail traders. And we could also watch what they do, examine their behavior, and as Forex investors, this is important because we have some more information as to what large corporations, what banks, and what investors with large amounts of capital are doing in the market. Okay, so now we need to know, how do we get the COT report? Step one, log on to this address. So we're going to go to the CFTC website. Now again, the CFTC, this is an organization that protects the futures market in the United States. So it's their job to make sure that everything is running smoothly and that there are no bad people in this market. So, in a nutshell. Okay, so step two, we're going to scroll down a couple of pages. So we're on this website, and what we're looking for is a current legacy report. So on this slide here, when we log on to that website, this is what we'll see. So we're looking for the current legacy report, and we can find it by going down to where it says Chicago Mercantile Exchange. So we find the column of Chicago Mercantile Exchange, and then we look at the column where it says Futures Only, and then we go under Short Format. So the current legacy report is under Short Format. So this row where it says Chicago Mercantile Exchange, futures only. And I have it circled in blue. So remember. Now, let's go to step 3. After seeing what appears to be an endless display of text, now what we're going to see, we're just going to see just a bunch of typings, a bunch of numbers, abbreviations. Everything is overwhelming, so don't worry about that at this point. So just go slow with it and just follow the steps that I've provided for you in the PowerPoint. So we're going to use Control F if you're using Windows, and if you're using Apple, then use Command F. Okay, so by pressing Control plus F, we're going to type in the currency that we want to find. Now, you must type in the currency code. So don't just type in US dollars or British pound, actually type in the appropriate code. For example, if we wanted to look at British pounds, we would type in GBP. Okay, and this is what we will see if we type in GBP. So again, there's a bunch of text with a bunch of numbers and abbreviations. It's overwhelming, I'll admit, but I'm going to go slow so we understand. Okay, so again, this is what we see when we go under Chicago Mercantile Exchange, short format, and then we type in GBP for British pounds, or any other currency you want to look at. So, for example, so notice that we typed in GBP. Up here it says British pound sterling. Then here we have a column for commercial. Now, these are the big businesses that use the currency futures to hedge and protect themselves from too much exchange rate fluctuations. So, under here, we can see the amount of volume that has been produced by corporations who are investing in the British pound. So again, here we can see what companies are trading with British pounds. Now we have the non-commercial. Now, this is a mixture of individual traders, like you and me, hedge funds, and financial institutions, banks. Now, for the most part, these are the traders who are looking to trade for speculative gains. So, think of the non-commercial as strictly Forex investors. Not all, but most. Okay, so here we have the word long 3 times. It just means the number of long contracts reported to the CFTC. So remember, long position meaning we buy the British pound and we're selling the cross currency. So here it tells us the number of times the commercial investors have gone long, and also the number of times non-commercial investors have gone long. So this is important because the number of investors going long might give us an indication as to how people feel about that currency. So remember that. And then we have the total. And then also short, and which is going the other way. So when we see the number of corporations and also the number of banks going short, that can also give you an indication as to how people feel about this particular currency. And I forgot to mention the total. So combination of non-commercial investors and commercial investors. But you probably already do that. Okay, and then open interest. Now, what is that all about? This column represents the number of contracts out there that have not been exercised or delivered. So it's also important to know whether or not these positions have been opened or closed, because that can also give you an idea as to how confident people feel about the certain currency. For example, if we have many open contracts on the British pound for those that have chosen to go long, it means many investors feel very strongly that the British pound will be a very strong currency in time to come. So the number of open contracts is also important as well. And then we have the number of trades. This is the total number of traders who are required to report positions to the CFTC. So obviously, if the number of traders are high, that means there's a lot of volatility within that type of currency. Also, over here we have reportable positions. The number of options and future positions, and we see this in the total, that are required to be reported according to CFTC regulations. So again, the CFTC, their job is to oversee all the transactions in the futures market in order to make sure that everything is legal, everything's on the up and up, and there are no bad people out there to manipulate the market. That's important because there are bad people in this market, and that can hurt people like you and me. Okay, non-reportable positions. What this means is open interest positions of traders that do not meet the reportable requirements of the CFTC, like retail traders. Well, again, we also need to know, to have an exact number as to how many people or how many investors are investing in this currency. Now again, there's really no way of telling exactly how many investors there are, because investors can be anywhere. Investors can be in front of their computers with their trading platforms. Investors could be at the airports making exchanges at the Bureau de Change as they're going on vacation. So there really is no way of determining how many people have bought and sold the British pound. So however, the non-reportable positions, what they do is they try to give us an approximate number of professional investors, that maybe individual investors that have bought or sold the British pound. Okay. So let's talk about the three groups: commercial traders, the hedgers; non-commercial traders, the large speculators; and the retail traders, the small speculators. So again, we need to pay attention to what these three groups are doing, because that can also give us information as to how people feel about the market. Not just people, but investors with large capital, or people or investors that represent banks, the brokers. Okay, so now how do we trade with the COT information? Which strategy should we create? Well, here's one way of doing that. We can find extreme net long or extreme short positions. So again, here's an opportunity to combine fundamental analysis with the sentiment analysis, because fundamental analysis answers the question of why this is happening, why this is not happening. Also, finding these positions may signal that a market reversal is just around the corner, because if everyone is long a currency, who is left to buy? No one. So here we can use sentiment analysis and technical analysis, because remember, we can only have so many buyers at one time, or so many sellers at one time. It's like you have a store, and in your store you have products that so many people want to buy, but how many people can actually fit into your store? You can't fit everyone in the world into your store. You don't have that much room. So that's another example of using sentiment and fundamental analysis. And it works the other way. And if everyone is short a currency, who is left to sell? No one. Now, let's take a look at this chart, and we can see for ourselves how information from the COT report works. Now, here we have an index chart. Now, on the bottom, we have three lines. The blue line represents the commercial traders, the green line represents the large non-commercial traders, and the red line represents the small non-commercial traders, as we talked about before. So again, When we look for extremes because the extremes will give us an idea as to which direction the market will head in. And sentiment analysis can also determine whether or not the buyers had enough of this market and it's time to close out the profits, or whether or not the sellers have had enough of this market and they're ready to close their positions. Okay, so now let's talk about the COT indicator. It works like this. Determining extremes can be difficult because the net long and short positions are not all relevant. What may have been an extreme level 5 years ago may no longer be an extreme level this year. So we need to know, how can we tell whether or not the extreme that we're experiencing now is the correct one? Well, here's what we do. We need to create an index that will help you gauge whether the markets are in extreme levels. So here's how we do that. First, we decide how long of the period that we want to cover. Then we calculate the difference between the positions of large speculators and commercial traders for each week. Now, unfortunately, when it comes to sentiment analysis, we do need to calculate our own numbers, so probably are going to need a calculator for this part. And difference, net position of large speculators minus the net positions of commercials. So we can also use the information from the COT to create our own index, which creates our own sentiment. So remember, we cannot rely on volume in the Forex market because our trading platforms don't give that for us. Okay, so then we rank the results in ascending order from most negative to most positive, so it's easier to understand. And we need to assign a value of 100 to the largest number and 0 to the smallest figure. Again, to making it easier for Forex investors to understand. And now we have a COT indicator. This is very similar to the RSI and the stochastic indicators that we have discussed in the earlier lessons. So what we've just created was a tool for sentiment analysis. Again, giving us a stronger advantage when we're investing in this market. Okay, so let's talk more about extremes. We need to calculate the percentage of speculative positions that are long or short, or would be a better gauge to see whether the markets are topping or bottoming out. So again, I put in 2 more examples of how we can create this with these 2 mathematical formulae. Okay, so again, we have a chart that shows us the extremes. So on the bottom we have our oscillator, and as we can see, the oscillator matches with the extremes. The market is reversing, and had we used this information and applied it with the currency pair that we're studying, we would have made a sizable profit. Okay, also, a closer look would show that 66,726 contracts were short, while 38,641 contracts were long. Out of all the speculative positions in August, 63.3% were short positions, meaning more short than long. Now, on the other hand, there were just 5,203 long contracts and 25,875 short contracts in March. This means that 83% of the speculative positions were short positions during that period. So the numbers were more lopsided. What does this mean? There's a higher chance that the bottom will occur when 83.3% of all the speculative positions are short, as opposed to just 63.3%. That's an example of how to plan our strategies by examining the extremes. Now, here's what we learned so far. Our trading platforms don't provide tools for sentiment analysis, but we can make our own. We can make our own by getting the information that the stockbrokers get when they study sentiment analysis in the stock markets. So Also, we need to keep in mind that one way to gauge the market sentiment extremes is to use that COT report. So again, it's going to take a lot of practice to analyze a COT report. You're probably not going to use this when we open up our demo accounts, but as we begin to understand more about developing our own index strategies, then that can be helpful as well. So again, this is going to take time, but it is important, so don't neglect it. Now, also by understanding the activities of the three groups of traders, we can find ourselves in better positions and tops and bottoms. And remember, every market top or bottom is accompanied by a sentiment extreme, but not every sentiment extreme results in a market top or bottom. So again, that's how we use sentiment analysis. And to go back, technical analysis tells us what the market is doing, and fundamental analysis tells us why the market is behaving this way, and sentiment analysis gives us an idea as to how people feel about the technical analysis and the fundamental analysis. So now we can see how all three are working together symmetrically. So keep that in mind when we make our investment strategies. Thank you for watching this video, and good trading.